Hello guys, welcome to today's video. So guys, I took this trade and I really wanted to show you guys the reason why I took the trade. So it's actually a very simple thing. I've been talking about smart money concept in this channel. I don't know if you guys have been paying attention to the videos, but this is the simple reason why I took the trade. I'm going to show it to you guys in this video. So I want to make this video a very quick one, so it won't be lengthy. So please kindly stick to the end so that you get what the information I'm trying to pass out to you guys in this video. So um, the first thing you should do as a trader is always work with your higher time frames first. You have to know what the market is doing on a higher time frame. So my ideal higher time frame um analysis is basically the 1 hour time frame, because I don't really like staying too long in the market. So I check out my 1 hour and see what the market is doing, then come back to a lower time frame like 15 minutes or 5 minutes, mark out my support and resistance, or demand and supply level, or I mark out my order block and wait for the price to reach there, and then I place an entry. So that's basically how I trade. So but let's go to the 1 hour time frame. This is the 5 minutes time frame, volatility 25s. So this is the 1 hour time frame. So what can we see on the 1 hour time frame? What we can see on the 1 hour time frame is that the market is actually very bullish. It's very bullish. So what does that mean? That means the market is forming higher highs and higher lows. Higher low, higher high, higher low, higher high. So that means the market is actually bullish. Done. So what do we do next? I go back to my 5 minutes time frame. What did I see in my 5 minutes time frame? I saw that the market is actually, sorry, I need to look for a buy on the lower time frame, which is the 5 minutes time frame, definitely, right? So, but how can I look for a buy on the lower time frame like this? This is what I did. When I came, the market was exactly at this. The market was exactly here. The market was exactly at this point. It was not. There wasn't. This move was not even there at all. So this is actually a retracement happening in the market, but I won't close my trades. I'll still leave my positions open. So what am I trying to point out? What I'm actually trying to point out here is that I have talked about my basic checklist before I enter a trade, which is that I must have a valid liquidity sweep, which is the first checklist, a valid liquidity sweep. Then the second checklist is that I must have a break of structure. That is the second. Then the third is that I must have a valid order block before I place my entries. So this is basically what I'm trying to say. Um, what is a valid liquidity sweep? A liquidity sweep is that this actually, right? Okay, sorry, let me do this. This is a liquidity sweep right here. This is a liquidity sweep right here, a valid liquidity sweep right here. What makes this a valid liquidity sweep? A valid liquidity sweep is only valid if the liquidity sweep, sorry, if the liquidity sweep sweeps over a valid order block. So where is our valid order block here? This is our order block. This is a valid order block. This bullish candle, sorry, this last bearish candle before this 1 2 3. An order block is only valid if there are 3 consecutive bullish or bearish candles after, like in this point, for instance, in this scenario, the market was coming down. It was forming lower highs and lower lows, lower highs and lower lows. It came all the way down here. Then what happened? There were 3 bullish momentum candles here. 1 2 3. 3 bullish momentum candles. So the last bearish candle before this three bullish momentum candle is an order block. So this liquidity sweep right here, this liquidity sweep right here, it swept over a valid order block, which is this is a valid order block. So it came and swept it all the way down. So this makes this a valid liquidity sweep. That is first thing first. Then the second thing, if had it been this liquidity sweep swept over an order block that was not valid, I wouldn't have even taken this trade at all. I wouldn't have taken this trade. So that is first thing first. Then that is my first the first thing on my checklist. Then the second thing is that I must have a break of structure, right? A break of structure. So which is like, this is an obvious break of structure, right? This is my second confluence. Then my third confluence is that I must have a structural liquidity, which is this right here. This is my structural liquidity. This is my structural liquidity right here, right? So that is my valid structural liquidity. Then after marking all this, the last thing I need to check out for is to mark my valid order block. And what is my order block right here? The order block is right here. This is my order block. Why is this my order block? Because immediately after the market came all the way down here, forming lower highs and lower low, lower high, lower low, and all that, this was the last bearish candle the market formed before these three bullish momentum candles, 1 2 3. So this was the last bearish candle. So this makes this last bearish candle as my order block. So all I have to do is wait for the market to come back to this order block, which it did right here. I didn't really enter the trade early. I didn't get on the trade early. I got on the trade here, and I added more positions here. So this is where I should have made my entry. I should have put a buy limit here. So immediately the market touched my price, it will trigger the trade and it will start, and I'll be in the trade. So this is basically my checklist for the, and actually this below is my stop loss below here, and then my take profit is all the way up here at 566,239.44. So this is basically my checklist before I look out for before I enter a trade. The first thing is that I look for a valid liquidity sweep. What is a valid liquidity sweep? A liquidity sweep is only valid if it swept a previous order block, a previous valid order block. So that is a valid liquidity sweep. So the second thing is that I need to have a break of structure, which I had. Then the third thing is that you need to have a structural liquidity, which I had. And then the fourth thing is you just mark out your order block, and then you trigger and you enter immediately the market touches your order block. And then your take profit is going to be the highest, the closest high the market for a buy, the market formed for a buy. This, for instance, this is going to be your take profit. And then if it is for a sell, let's say you enter the market here, this is going to be your take profit, the last low the market formed. So that is basically what I do to trade. I know some of you guys might not really understand the point I'm trying to make here, but I'll try and make a more elaborate video on this checklist by the special grace of God. So with this, just anticipate another more detailed video on this topic, on this checklist. So if you've not subscribed to the channel, please do, so that when I drop the more elaborate video, you guys will get notified by YouTube that I dropped the video. And also like this video, please, it helps me a lot. So thank you guys for watching, and I'll see you guys in my next video.